The US dollar has long been a cornerstone of the global financial system, but its role is increasingly under scrutiny. With Donald Trump back in the White House, scheduled to be back in January, new uncertainties are emerging about the stability of dollar-denominated assets, especially for countries like China, which hold significant US debt. Take a look at this next report for more.
The US dollar has been the backbone of the global financial system for decades, serving as the primary currency for trade, debt issuance, and central bank reserves worldwide. However, concerns have intensified recently, especially in China, over whether the US dollar can remain a safe haven currency. These concerns are amplified by Washington's growing use of economic sanctions. Now, with Donald Trump returning to the White House, uncertainties are increasing about the stability of dollar-denominated assets. Trump has pledged to prioritize the dollar's dominance, even threatening 100% tariffs on countries that distance themselves from it. This signals an intensified economic policy approach that could impact global markets. For China, which holds the world's largest foreign exchange reserves at over $3.2 trillion, US dollar assets have long been a core component. China holds $774.6 billion in US Treasury securities, second only to Japan. But Trump's policies, combined with mounting sanctions risks, have spurred voices within China advocating for a shift away from US Treasuries. Experts warn that if US-China relations worsen, the US could freeze or force the sale of Chinese-held assets, raising major concerns for Beijing. China has already been gradually reducing its US debt holdings, which have declined from over $1.3 trillion in 2013 to below $1 trillion in 2022. As risks grow, China is exploring alternatives. This includes increasing the international use of the yuan in trade settlements and issuing debt in non-dollar currencies. Meanwhile, analysts warn that the US budget deficit, which exceeded $1.8 trillion last fiscal year, poses an additional threat to confidence in US debt. While the dollar still dominates global reserves, some predict its share could fall from the current 60% to 40 to 45% by 2050. In the near term, China's dollar dependence may persist due to structural constraints, but efforts to diversify are expected to accelerate as it seeks to reduce exposure to US assets. Business Bureau WION World is One.